welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching. Today we're going to talk about what we can expect in the month of January. I know we're still in December, but we've got January coming up, and it's important to know what generally will happen in the month of January when the low has typically come in, and how we might be able to best prepare for that, as well as I'm going to show some of the indicators that I use and how I get some of my setups for trading and a whole bunch of other stuff. Of course, before we do that, smash the like button. This helps get this channel out to more people and does help support the channel. I do appreciate the kind words that you leave in the comment section below. You take the time to write them. I make the time to read and respond to those, as well as the questions that get asked below in the comments as well. I do get back to those as soon as I'm able to, with a very emphasis on as soon as I am able to. So please be patient if you would like a more speedy response. Of course, you can jump in the stocks with Josh Discord with the most amazing people on the planet, and there are tons of incredible crown traders and help that is there. I'm in the crypto channel there daily, as well as the newly created memes channel, the Party Zone in there, and I have my own crown traders channel in there as well, where I'm providing education, resources. I share some of my trade setups, and of course entertainment, because I'm not a financial advisor. This is not financial advice. It's for education and entertainment purposes only. Are you not entertained? Okay, so we're going to jump into the show here, and of course we're going to start with January low of the month from previous cycles. Okay, and you can follow me on X. So below, if you just click, if you want to find the description, sometimes it's a little bit difficult to find, you click on the more button, the description will pop out, and there'll be right at the top, there's how you get signed up to the Discord there, the Stocks with Josh Discord, and then right underneath it should be the X handle there, and you can follow me there. Okay, so the January low of the month from previous cycles, we've seen the 1st, the 12th, and the 4th of the average for post-halving years. So that would be 2025. So number one, jump on X and tell me what your prediction is of what will be the low of the month. I would like to know what you think will be the low for the month of January. I think the low for December is in. I think it came in on the 5th. And I do this every month because we've seen, as before, in 2020, in a previous halving year, 2016, 2012, we saw the low month came in the 2nd, the 5th, and the 10th. So it always had come in by the 10th. I think it's going to be December the 5th. I would be shocked if it was not December 5th. And so if we look here, we can see now we have to jump to 2013, which is the year after, to get the corresponding year in the halving cycle for 2025. That's why I have these years here. Of course, so the average is 5.6. Over all the years, the low of the month average is actually 12. So it's interesting. So that's over all the years. Sometimes it was a bit later, sometimes a little bit earlier, but average comes out to around about 12. So the 1st, the 12th, and the 4th, very interesting. So I'm going to lean more towards the first part of the month, the first week of January. I'm going to say that that's when I think the low of the January month. There has generally been a correction for the month of January. This just seems pretty common sense to me, that a lot of people are, it's not rocket science, all right? A lot of people are needing to pay for things over from Christmas period, from their vacation time, for presents, and so they want to, and they also are looking to lock in some profits, because maybe they didn't want to lock it in 2024 because they don't want to have to pay the tax bill in 2025. So they lock it in 2025 so they can pay the tax bill in 2026. So I kind of feel that we're going to go a little bit. We're not going to go into all those details. I am going to do an upcoming video of when we do see the drop. I'll be looking at adding a full breakdown on when the drop has happened and how long it lasts and when we start to come out of it, so we can get a better feel for how we can be best prepared for January. And if you don't have X, I would love to. I just posted this, by the way. So go and like that post. Leave me what you think your prediction on X. But if you don't have X, that's fine. Go onto YouTube And while you're on YouTube, of course, go onto YouTube, comment in this video. It's early, people. It's early. Forgive me. Okay, so let's look at the price of Bitcoin right now. It's steadily just been sitting around 100. And I did say yes when I did my video yesterday that and the day before that I felt it was going to range. And I felt it was going to range between the 99,600 level up to around this 103, 104 level. And that's exactly what it looks like it's doing right now. So it looks like we've created a new range and that we've broken out here and we're getting some closes above it. Would be nice to see a few more daily closes to confirm, maybe even come up here to this $103,000 level here. We've got the tribal trades trend line that is holding up as support. We've got some Fibonacci levels here as well. I am going to take one of these things off here. That's it. So as you can see here, that is playing out as I kind of expected. And I did say that over the last few days in my videos, I did expect it to range in here. And then I'd be looking for what would happen on a retest here. Maybe we do come back and bounce around for a little bit and then possibly, but of course, a takeoff here, a retest, and off to the races. A lot of predictions on the YouTube channel. Yesterday, people were sharing what they thought the price of Bitcoin would get to December. So let me know what you think the price of Bitcoin will hit in December. Historically, it's gone up around 30 and 46% in a halving year in the month of December. And we have looked at that. I'm not going to show that chart again. Obviously, a 30% rise up would take us to 130,000 and 46% would take us up to 146,000. Some of you had more conservative levels that are around that 117 level and also to the 122,000 level there. And I've identified some areas there. There's a good range. But as we start to get through the month, I think we'll be able to zone in on a little bit more of where we may get to for the month. And just remember the January dump. Last time there was a 30% dump. I don't think it'll be this high this time, and we'll go into that in a later video. But I think 20% is more being the norm of correction. So it'll be a bit of a surprise to get anything over 20% because that hasn't happened in this cycle yet. And it could quite possibly be less than 20%, but I figure it's going to be 20% plus drop in the month of January. Okay, that's what I do think is going to take place if history does repeat. Remember, history doesn't always repeat, but it often rhymes, and there are no certainties. These are just really probabilities, and I like to trade the probabilities because I like to trade probabilities that give me better chance of winning. Therefore, I tend to win more often than not. Okay, let's look into the liquidation heat map here, and we'll look at Bitcoin. And this is a free resource. It's the yellow brick road. And as you all know, if you haven't seen this video before, this is the liquidation heat map, and the money will follow generally the yellow brick road. And that's why we say, follow the yellow brick road. Follow the yellow brick road. We're off to see the wizard, the wonderful Wizard of Oz. And you just have to follow the money. As you can see here, the highest levels of yellow, that's where the price of Bitcoin tends to go. And so we came through here and then we came up here. And now really we're pretty close to 102,800. So it wouldn't surprise me if we then came up to take that level, although we did already came up and took a level there. And then guess what? New liquidity opened up down there. And I think it was coming down probably down to this 98,700 level. And then all of a sudden it's like, well, hey, there's some new liquidity that appeared there. So it could be. Let's go to the shorter time frame there for Bitcoin. On the 12-hour time frame, we do see that upper liquidity at 102,000, 102,000, and 103,000. Below, we've got it at 100,000. And that's why I've been talking about this liquidity moving up and down and playing in that range there. And then, of course, the bigger time frames, again, confirming 102,000 and 100,000. And then, of course, we go back to the 48-hour range here, and it's 102,000 and again 100,000 there. So it's not until we get to the 3-day range that we do start to see it down there at 98,000. If we go down a little bit lower to the weekly time frame, I just like to quickly check all these time frames. Yeah, we do see a fair bit down there to 98, even down to 96. That's a little bit of a one. It's just about determining, okay, where to from here next. We're currently sitting at 101,000. The closest liquidity is 100,600. That's the closest liquidity to price. But the most liquidity is up around that $102,000 level. So I think if we just continue to range there, I think more so the alts will range or continue to can pump and go up. And it's just like a little bit of a sideways market at the moment. But if we go back to Bitcoin here, you can see, well, 102, we've got 101,980, which is basically 102,000, and that's where there's some liquidity there. So I wouldn't be surprised if we came up there and also down 100. And maybe we do see this 98. At some point, liquidity is going to get left behind. Okay, there's usually a bit of a flush, and then the liquidity will get left behind. And so there's 98,000 and 96,000 levels to the downside, and especially this 98,000 level, because we do have a double Fibonacci level here. This is called Fibonacci stacking. And so we have a double Fibonacci here that's in the yellow. These are my single Fibonacci's here. So there's a little bit more going on. Now, I want to talk to you about how I use some of the liquidation heat maps, not specifically on Bitcoin here, but I'm going to choose a different coin. I'm going to choose Dogecoin. And so if we look at Dogecoin, I'm just going to show you just quickly where the setups are, because the market does range more than it trends. And this on the 4-hour time frame actually looks like, a little bit of a bull flag pattern there. On the 4-hour time frame looks quite good, possibly even on the daily time frame there is a nice bull flag there. There has about a 67% certainty of breaking to the upside, so that could be a play there. And where is the best place to get on that bull flag? Usually at the bottom of the flag. So a couple of things. So number one, I'll kind of have a look at that and say, okay, we've got a bit of a bull flag, and the bottom of the flag pattern is down around here. So that's number one. So I'm just telling you live how I looked at this chart. Number two, I'm looking at it and I'm saying there's a Fibonacci level right here at 37 cents. There's also a Lux Algo order block there at around that price, down to around 37, 36 cents. We just happen to have the 200 EMA on the 4-hour right around that level there. And at the time, on the liquidation heat map, but at the time, there was a liquidation level down at 30. So now I've got quite a few areas of confluence. What I also have here is that this has been quite good support. We broke, it was resistance here. Okay, so we broke through support, resistance, support. This is a key area right here. This is a key area, okay? And then I'm saying support, didn't even, this acted as support. And so for me, trading this, there's my entry right here. On the button, that's where the entry is made for this setup. That gives me the highest probability, in my opinion. There's no guarantee. Maybe it shoots down here to the 50-day moving average. I also like to see where the 50-day moving average is, and I will sometimes check that out. So this is just showing you a little bit of my thought process on my setups there. I'm using the Fibonacci's, I'm using the 200 EMA there as well. I'm using the Lux Algo order blocks, okay, they're on there. This is a paid service there. It's in my cheat sheet where you can get the link to sign up for the Lux Algo order blocks there. So with Fibonacci's, we've got the 200 EMA on the daily. We've got the Lux Algo order blocks that is also there. We've got the liquidation heat map, which is off here, which we just showed before, but we'll look at that at the moment to see where Doge might go to next. And then, of course, we've got the 50-day moving average that is also down there as well. I sometimes use the EMA ribbons as well. And, of course, we have these volume indicators there as well. Now, I do have a video on my cheat sheet under the education section. My cheat sheet can be found in the Discord. It also can be found back, if you go back to a previous video back in November, I'm sure one of those videos will have a cheat sheet in the description, and you can check out the education tab on that. And I do, in my life-changing game series, show you how I set up these indicators. Okay, so that's the kind of thought process. So let's go to the liquidation heat map here, and we're going to search for Dogecoin. Okay, so you can go to liquidation heat map and you can choose other. I usually always, you can do more than Bitcoin. You can do any coin that's got leverage, derivatives, futures trading, whatever you want to call it. So there's the liquidation heat map. So yeah, maybe it wouldn't be a surprise if Dogecoin dropped from about 0.5 cent. That's not a whole lot, but you can see there is a lot of liquidity up there at 41 and 42. cents there for Doge. And if I click on the weekly time frame, it will let me go back a little bit further here, mate. So we go back to the 10th of December on the charts, and there you can see the liquidity level that was there, that got tagged on the 10th of December at 37 cents. So I go, okay, there's a lot of liquidation level there. And so you can see the liquidity came and got tagged down here. And so this is where I found this 37 here. And if we go back to Dogecoin, so now what we've got with Dogecoin is we've got the liquidation level, we've got the Fibonacci's, we've got the 200 EMA on the 4 hour. And a lot of the times I want to find the 200 EMA on different time frames. So I might have to go the 2 hour or the 1 hour, but I find where is the 200 EMA closest underneath price, okay? We've got the 50-day moving average. So in this case, that didn't really come into play. We've got the Lux Algo order blocks that are there, of course, as well. And then we've got the volume profile number 6. So look, I do keep an eye on the RSIs, whether they're oversold or overbought, or if there's any bearish or bullish divergence there. But what I can see here is just clearly ranging. Remember, the market ranges more than it trends. If you're only making money on when the price goes up, you are missing out on probably the biggest gains in the bull cycle. The biggest gains are made by trading this, getting in here and taking profit here, getting back at the bottom of the range, taking profit again, coming back. And you can build positions. You can kind of jump in here, jump in here. You can jump in here, and if it holds, you can hold the position. But if it drops, you can stop out and then get down at the next level there. So you can get in here. So how many moves have we got there as it broke through? We've got 1 take profit. We've got 2 take profits. We've got 3 take profits already from this range, whereas this trending move just gives you 1 take profit, or maybe some people aren't taking profits yet. They're just waiting and waiting. So you can be making money in the meantime. And then, of course, we have a situation where we're coming back. Now, if we were to come back and retest here again, which we might, this may give a second entry here. Otherwise, we could just keep scuttling up here all the way up to the top, and eventually we're going to, I feel, break through. I feel it's more likely that we're going to break to the upside. Bullish flag patterns have about a 67% higher chance of breaking out to the upside than they do to break down. Of course, there's a chance that this does break down, but then we do have 50-day moving average down there. Right now, it's not in a place where close to price action. It's all the way down there at around 32 cents. So that's how I would trade this price action there, just giving you a bit of a glimpse of my thought process, how I look to get setups, how I use the liquidation heat maps in conjunction with a bunch of other indicators. Of course, there are some others that I do consider, but these are the ones that I mostly focus on in my trading, and that's my thought process. I hope you enjoyed the video today. And of course, until the next episode, happy trading.